What's up, YouTube? Welcome back to another video. Portfolio is up $6,000 on the day. We have some news that the war is getting a peace treaty. So we'll see if that stands, but the market's very bullish on those news. And we're up 3.8% on the day, which is pretty cool. I think that QQQ is tracking around 3%. So let's compare our portfolio here. 3.1% and actually trading down after hours. So sliding beating the Qs on a big green day, which I'm happy with. And I have 4 new stocks that I'm buying with some of this cash right here. I sold out of Netflix mainly because the stock was going nowhere for like 6 months and I was getting frustrated. And I just think my $8,500 are best used somewhere else. And I ended up taking like a $600 loss there with that position. And that's fine. You know, I still think Netflix super healthy. They make a ton of cash and they're still growing active users. It's just not the exciting company right now. But portfolio is up $6,000 on the day, which I'm super happy. And I'll do an overview of these 4 stocks that I'm buying. And I'll keep adding to them because I'm very bullish on them. And they're 4 quality companies that have been beaten down, I think, in my opinion, unfairly these last couple of months from the market. So let's get started. First one's Robinhood. If you've been following the channel for a little bit, you know we're running the wheel on Robinhood whenever they were trading at $68. So to think about that, they came from all the way to 65 to 90, which they're trading at today, is just insane to me. But I started adding to them a couple of weeks ago. And back in the day, we had 100 shares at 65. Should have just held them. You live, you learned. I'm going to keep adding this position. We have a $95 average. Still very bullish on Robinhood. A couple things going on with them. They just got underwriter status, which is a big thing in the IPO business. So they're going to have more IPOs go through the platform that they can actually launch themselves. So that's another revenue stream for them as well. They have more than $300 billion in customer assets in the platform, which is massive. They're growing the active users to more than 22 million, which is a ton of people. Very bullish on the platform. I think they've gone away from just being a pure speculative crypto platform play to being its own kind of fintech monster, so to say. If you guys can see, like, fintech has gone crushed as of late, but I think we might see a little bit of a rally here. And I'm a fan of SoFi as well. I just think SoFi is not as mature as Robinhood yet. And I saw the interview with Anthony Noto, and he was great. Honestly, he was saying a bunch of the good stuff about the company, and I agree with him. I think it's a phenomenal company. But when it comes to SoFi versus Robinhood, I'm a bigger fan of Robinhood, just mainly because they've been around for longer. And I think the functionalities within the platform are the best. I've been using this platform for a number of years, and I'm trying not to be biased here, but amongst younger people like myself and you guys as well, I'm sure Robinhood is the brokerage that you pick. And yeah, they had the fiasco with GameStop back a couple of years ago, but that's all past them. It was also part of Citadel's fault. But that aside, you know, let's look at their financials here at the bottom. They're growing their earnings per share. Looks like we had a slight pullback here, Q1 of 2026. But as you can see, they're beating earnings every quarter, quarter over quarter. And I bought $1,000 worth of the stock earlier yesterday. June 11th, I bought $400 worth. You guys can see I had 100 shares at $86, which pains me because that's a better cost basis than I have now. But it's all good. You know, we're back in the stock and we'll hold long term and build this position as drawdowns happen or even upswings. And I plan on adding some money to this portfolio as well. And I'm growing this portfolio to $1 million. So I'll keep adding money to it. And this summer is going to be a great summer for me, just in terms of money and the portfolio. I'm growing this to $1 million. So if you're here, don't forget to subscribe and like the video. So let's talk about stock number 2. I've been buying Marvell, and they've had a day 10% on the day, which is bizarre. A little bit of a pullback here after hours, probably healthy at this point. 1.4% pullback, and I only have 4 shares as of now, 4.8 shares with the 288 basis. And I also had Marvell in the past. If you guys been following the portfolio, this is actually kind of wild. My timing is just always off. This is what actually happens with me all the time. If you guys can see, I bought shares at 188, and then again, I bought another $1,000 worth at 211, sold at 203, and then rebought at 266, and then 290. This is a mess. I should have just bought heavy at 188, and I would have like doubled my money at this point almost. But it's all good. You know, I'm still bullish on the company. I think they're a phenomenal company. Like I've mentioned, the semiconductor space has had a reprice So yes, Marvell has had an incredible year so far at a 250% return. But you guys have to understand, like, this whole sector has had a reprice when it comes to the industry in general. The big thing with Marvell and most of these semiconductor companies is they're very cyclical. If these hyperscalers pull back on funding for whatever reason in their build outs, these companies are cooked. Honestly, there's no bull case anymore for them. A lot of the projected revenues are based on Amazon, Microsoft, Google, all these other hyperscalers spending a lot of money with them. And it's a risk we're taking. And that's why they've traded up 250% year to date. So just in 6 months, they've traded up so much already. And they've already had a pretty good run. But here's the thing, they have $16.5 billion worth of revenue projections for 2028. So their CEO is like extremely bullish on this. Like Jensen Huang is talking about how this is $1 trillion company very soon. So if we have a multiple expansion, which is actually a little high already, but if we look at a forward multiple, it's probably in the 40s or 50s, which for these type of companies, and it's crazy to say, it's actually somewhat low. So if we have $1 trillion market expansion here that Jensen Huang has been talking about, and a price to earnings ratio that catches up to the 60s, 70s, and 90s for a forward basis, we can see the price go up a good bit. And if this momentum continues, I think Marvell is going to catch that wave. If you look at SanDisk, for example, they've ran 758% year to date. Like, look at this. They're making all-time highs every day. Let's look on the day. They returned 6% on the day, 32% on a week. Jesus, this thing is unstoppable. These trades are insane. I don't understand how they keep going, but they do. If you look at a 3 month, 205%. This is crazy. But talking about Marvell, I think if Marvell just captures a little bit of that momentum and just do their smaller market cap and all of the hype around this industry, I think they can raise a good bit. And it's a bet I'm willing to make. Of course, I don't have much money into this yet, but I probably plan on adding around 10 to 15K to this position and these other ones that I'm about to talk about as well. So let's get into position number 3. Position number 3, ServiceNow. I think the time is now for ServiceNow. They've had a terrible year when it comes to price action. They've actually had somewhat of a recovery here to 135. And I think the market's giving us another time to buy up the company. A 52-week low at 87. And we had an all-time high last year at 208 or maybe 210, 212. So as you guys can see, the company has been being down a lot. And if you guys are not familiar with the company, ServiceNow is basically an aggregator of multiple tools. So whenever you run a company, for example, like a massive enterprise, you have multiple different tools in IT, in HR, and ticket handling, whatever it is. And ServiceNow is the aggregator of all those tools so the different departments can talk to each other. And now they're using AI and letting AI agents run through their platform. So if you think of ServiceNow, they're not going to get disrupted by AI. They're actually the ones enabling businesses to run AI workflows and AI agents. So they're going to benefit so much from AI. I'm very bullish on this company. They have this path to grow to $30 billion in revenue, which is crazy. They had somewhat of a relief rally right here, but as you guys can see, they're back to trading down. And the thing with ServiceNow as well, they work with a lot of Fortune 500 companies, actually most of them. And I think they're going to benefit so much from AI. Like I mentioned, they have this path to making $30 billion by 2030, which is a lot of cash. They have a ton of employees. Their CEO is like this character, dude. If you guys haven't seen a ServiceNow CEO, go look him up. Like, he's always wearing shades. Guy's a character. But as you guys can see, like, yes, they are trading at a somewhat of a high multiple. But when it comes to software companies, especially like this, a leading monster like ServiceNow, I think this is a phenomenal opportunity regardless of their price to earnings ratio. And if you look at a forward PE earnings, if you look at a forward PE ratio here for them, it's probably in the 40s or even high 30s, which I think is extremely low for a company of this size and this magnitude. And they're trading at $100 billion market cap. Like, you see their CEO talking about how they're going to be $1 trillion company one day. I think it's extremely bullish. Their financials are also phenomenal. Look at the earnings per share growth. They're beating earnings all the time. And as you guys can see, like a steady path upwards. and the stock is going down. If you guys have seen me talk about, I'm looking for companies that have had their multiple compressed and their earnings per share increasing, but their price for some reason has been beaten up. And that results in a multiple compression. But I think the business is solid overall. They have this path to growing revenues, and I'm extremely bullish on them. If you look at price right here, I bought a share, an experimental share at a 135 basis, just so I could have it on my portfolio and not forget about the company. Then I bought $400 and then $1,000 the other day, accompanied by the other two picks that I just shared with you guys. And let's get into company number 4 that I'm adding to the portfolio. This one's going to be for sure the most controversial one of the 4. I'm putting some money into Micron. They have earnings coming up on the 24th, and I think it's going to be really interesting to see what happens. I think they're going to guide really strong earnings, but we've seen good guidance from companies like Broadcom, for example. They traded down 20%. So even with good guidance, these companies are trading down. So it's going to be very, very interesting to see. Micron has a 9 forward price to earnings ratio, which is bizarre to me. A company of this size making this much money, having a 9 forward PE. So that's my thesis. Like, I think they still have a lot of room to grow. And just because they've gone up 260% on the year, it doesn't mean they can go up another 500%. I just showed you guys SanDisk. They have 10% days like it's nothing. And I'm predicting that Micron will be the same way. And earnings will be very interesting to see here on June 24th, which is next week. We'll see what they say when it comes to their numbers. If we look at their financials here at the bottom, yeah, look at this chart, guys. This is ridiculous. They're like tripling, quadrupling their earnings per share. Like, look at this. They were trading at around $5 in terms of earnings per share. And then look at this growth. It's exponential. This is a perfect example of when I'm talking about a reprice of an industry. Like, look at this. These companies are making so much more money. They have an estimated 19.6 earnings per share for their earnings coming up next week, like I mentioned. And this is a phenomenal example of what's going on in this industry, where you go from Q1 of 2026, where things are heating up, like revenues are trending up, and then you just have a double and then another double. So this is going to be interesting to see if they're sustaining the growth. And June 24th will be very, very telling to understand how healthy this company is. Holding off and being patient with Micron, because this is a very speculative play. As you guys know, the semiconductor industry has ran so much lately. And I understand that this could all collapse tomorrow. Or this could also track SanDisk's return and go up even more, which I think is very possible it does, honestly. But they're already trading at a somewhat high multiple. So is this company going to triple from here and have like a $3 trillion market cap? It's tough to think that it will happen. And, I don't know. I've been wrong before multiple times when it comes to market capitalization of companies. I remember when Apple in 2018 or 19 reached $1 trillion. I thought it was unfathomable for a company to reach $1 trillion market cap, and they continue to rally. So when it comes to things like this, you have to be, cautiously optimistic. You don't want to get a lot of money into these companies because they could all just lose a lot of momentum if, one, the hyperscalers pull back on funding, or if Micron is not able to fulfill on the chips and promises they're making to the hyperscalers, or if rates go up. That's also a bearish thing for this company because they're going to have to raise money at a more expensive price, and risk assets, especially speculative growth risk assets like Micron and the semiconductor space and tech stocks in general, are going to have a massive reprice and honestly a correction. If we see Kevin Warsh talk about raising rates by end of year, forget about it. This thing is going to be so red and is going to be another great buying opportunity. But we'll wait for that. That's another catalyst happening this week. So these are my 4 AI bets: ServiceNow, Marvell, Robinhood, and Micron. Robinhood not necessarily being a pure AI play, but they of course have a lot of exposure to AI. And this is a concentrated portfolio, guys. I'm riding the AI wave. You guys know I have a lot of exposure to Meta, which is one of the biggest hyperscalers, spending so much money in AI, and the market has been punishing them. Amazon's the same way. Google's my largest position. So this is a very concentrated portfolio. I don't recommend you trade like I do, or have a portfolio like this, I do recommend you understand your risk tolerance and do your own due diligence. This is not financial advice. I'm just sharing what I do with my money. So if you like what you're seeing, don't forget to leave a like. Let me know in the comments what you think of these 4 plays. I'm going all in on AI. I'm extremely bullish on it. And these are the 4 companies that I'm buying up right now. So let me know in the comments what you guys think. Don't forget to leave a like, subscribe. I'll talk to you guys soon.